Hello friends, welcome. Friends, we all know that in India, the foreign exchange reserves of late has become pretty volatile. You can see that in this website. I have foreign exchanges. I am being tracking foreign exchange reserve of India changes in various time scale, and this is a weekly scale where you find that it is kind of pretty volatile. And in the foreign exchange reserve, there are two major components. One is the foreign currency asset, which is also following the same trajectory, and the gold, which is having a different trajectory, right? You will see that these are uncorrelated. The variations are uncorrelated. Now, friends, why I'm doing this video today? The reason I'm doing this video today is that I am going to show you that why India is buying gold and what is the Indian ranking as far as gold buy is concerned, and how this is strongly related with the management of India's foreign exchange reserve, and how the foreign exchange reserves are getting influenced because of the various mix of gold and foreign currency asset, and whether this phenomena of buying of gold has taken a significant change of trajectory compared to what it was past, and if yes, how much. The video is going to be very important because gold has become a very important commodity of late because of the rising inflation, and I'm going to show you different prices of gold in different currencies and whether those gold prices are linked with their trend of central bank of buying gold or not. So that's going to be a very interesting video, and it is a kind of a macroeconomic video to give you a sense as to where we are heading, whether we are heading towards a inflation stable economy or we are still going to have a huge amount of uncertainty about what the inflation is going to be like coming in future, because that's going to impact the consumers directly. We as consumers are going to get impacted directly. So what is the trend like and how long this trend is going to perpetuate in future, which we will be able to speculate based on the current data and what we have been seeing in recent past. So that's the whole objective of this video. So just be with me, and I think I will take you all the charts and you will be able to understand. The first chart that you are seeing in front of you is which I've already described to you, is the tracking changes of Indian foreign currency exchange reserve on various time scale. I've chosen a weekly time scale, and I will change this to a monthly time scale, and you can basically see what the trend has been. So it kind of peaked till September 2024 and then suddenly dropped, and then it is slowly showing a sign of stability or going up. Is it really a sign of stability going up is the question that we are going to answer in this video. Then the next set of chart is the central bank holding of gold. So let's look at this. The global central bank trend of buying, selling and holding of gold. Now here what I have done, friends, so let me just zoom in a bit so that you get a better understanding what is going on here. So this chart is central bank top holding buy on a monthly trend. So I can choose different time frame, quarterly and yearly as well. And whichever country that you want to choose to see the bar chart, so you can click here. For example, if you want to see India, the India's trends are going to get displayed here. Okay. Now let's look at and investigate this chart. Let me just zoom out a bit so as to get a better view. So what we will do is what I've done is I've sorted this heat map based on the total hold. The total hold is here. You see, based on the country. So India is ranked 8 as far as total holding is concerned, and within this time period from February 24 to January 25, India has bought how much? India has bought 67.6 million tons of gold. So this is in million tons. So you see, metric tons. Yeah, sorry, metric tons. So 67.6 metric tons of gold. Now let's look at from different time scale to see what is going on. So if I do a quarterly time scale, let's look at what is going on. So you see that India has bought around 118.6 metric ton. So this is the trend. But the better picture would be if I see an yearly time frame. So yearly time frame based on the holding. So if you see that United States, Germany, Italy, Russia, China, India is still 8th, and India has been buying gold significantly starting from FY19. Before that, India has not bought significant amount of gold. The gold buying trend has been consistent since FY19, just before the time the inflation started to spiral out. And then the COVID thing came and then it went out of control, right? So this is where the Indian, and let's look at other countries, for example, United States, they have not done anything much. Germany, they actually sold gold, right, within, various periods. So they have not been, Italy also has done nothing. France has done nothing. Russia has been a significant buyer of gold because it was preparing for the invasion of Ukraine. So they bought huge amount of gold. China has been also consistently buying gold since FY16, and in recent terms they haven't bought significant. If I do a time scale of, let's say, from FY19, so 8, let's do an 8 period. So that will give us a comparison how much India has bought. So you can say that China did buy gold compared to the at a higher quantum than India, 442 million tons. Metric tons compared to India's 318. So you can say that given the size of Chinese economy, India's buying trend kind of proportionately may be higher than, if you really do an absolute, on a proportion basis, higher than China, right, over this period. So India has been a consistent buyer. So let's do one more thing. Let me just do a row sum rate of ranking, which will give us a trend as to who bought how much gold within this period. FY19 to FY25. So you can see that China has bought is the rank first, Russia is the next, Turkey is the third, Poland is the fourth, India is the fifth nation, and then followed by Hungary, Singapore, and Qatar, and other countries which are very, very not at par with what these countries have bought, including India. So these are the big buyer of gold. The central bank has been buying gold. Now, why is India buying gold? Why these countries are buying gold? You know that Russia has been buying gold because of the reason that it wanted to, somehow reduce dependency on dollar and, may keep gold as an holding currency so as to deal with this uncertainty which will emanate out of this war. China probably buying gold because of similar reason. I'll tell you why. And Turkey, the currency is pretty weak. So they have been buying gold just to stabilize their currency, or maybe using gold as a reference currency. Poland is also buying gold. I don't know. I have not investigated why Poland is buying gold. So let's go back to the next chart, which will tell us the story as to why India is buying gold. Now, why it is important to look at this chart? This chart is telling us the global gold foreign exchange reserve dashboard, means the proportion of gold with respect to the foreign currency reserve. Because that is a very good indicator, is the how much proportion of gold India has or any other countries have with respect to their foreign currency reserve, right? So if there is a drastic change in the ratio, then it basically tells us that that country is now, going and, leaning towards gold as a major component of their foreign exchange reserve. If it is not, it means that because of the disproportional changes in the foreign exchange reserve, they wanted to stabilize the proportion of gold. That's why they are buying. So let's look at what is happening with India. This chart also you will get access to my website. So this is the India block. And then, by looking at various countries, you can basically choose any dimension here and you can get a ranking down below. So let's look at the India block. So you see that I have chosen a quarterly time scale. So let's look at a yearly time scale, right? And then it will give a better view. So you can see that steadily India's foreign currency reserve has been rising, and somehow it has got drooped down in FY25 because of management of US dollar currency rate. Because of that, India has spent a lot of foreign currency reserve to contain the devaluation of rupee. Now, if you look at from a gold point of view, the trend is that India's overall gold reserves have been increasing, right? So it is 876.2 in terms of tons, right? Now, if you look at from a gold US dollar value point of view, it is a valuation in US dollar, the value has increased, right? And now this is interesting, that what is the percentage of gold to the foreign exchange reserve. So you see that the percentage increased and then slightly decreased, and it became very, very low compared to the foreign exchange reserve. And then it basically started to go up. And in FY25, it has barely gone above the FY12 foreign exchange reserve, which is 10%. You see? So if you look at this row, this tells you that any intent of India to buy gold has been done with an intention to maintain this ratio, or to keep this ratio to the level what it was in FY12, FY13, 14, because after that the ratio basically went down significantly. Our central bank probably were not hoping that we are going to collect so much amount of foreign exchange reserve. So there was a phase lag between the accumulation of foreign exchange reserve and the increase of gold holding in our central bank. And then when they realized that the foreign exchange reserve is going out of control and the proportion is dropping, and then they started buying gold. So this is one of the major reason which I feel that the gold trend of buying by the central bank, especially India, it can be linked towards. The other important thing is going to be very significant to understand, right? Why? So for that, I have to look back in the earlier chart which we were talking about. Now this chart I am going to do a weekly trend, because that is going to give us a very interesting insight. Why it is going to be interesting, and you will be able to understand once I take you through this chart. So you will find that our gold prices, right, has remained. Let me just take my arrow properly. So the gold prices were roughly in the stable, because this is the valuation of gold, right? As far as foreign exchange reserve is concerned, $1 billion. So you see, it started to rise, on a weekly, this is a weekly chart, right? It has been steadily rising, and it has reached a very, very significant portion, and then it has dropped, right? Whereas our foreign exchange reserves basically have been following this trend. So gold is, what we told you, is completely uncorrelated. Now, our overall foreign exchange reserve that we have is an addition of these two items. So because these two things are uncorrelated, this part and this part is uncorrelated, it has been able to stabilize this row. So the stability of our foreign exchange reserve is dependent upon the correlation of these two asset class in our reserve. So that is why there is a need to maintain a proportion of gold so as to prevent this thing going highly volatile. And let me show you one more chart which will give you a sense as to what is going on. Now this is the the spot prices of gold, and let me just zoom out a bit. Now you will see that this is again on a weekly basis. So you will see that this chart actually has a bar chart and a heat map. The heat map is the ratio of the value of gold with the start of the window as the price have increased over a period of time, so that the ratio increases. Now if you click on any of the entity, you will get a bar chart corresponding to that entity. So I have chosen the bar chart of India, and these numbers are in INR showing the spot prices of gold. So these are the spot prices of gold. Now you will see then the week of 23rd of February, there has been a drop in spot prices of gold as far as INR value is concerned, as well as the USD value is concerned. So if I click here and USD, you'll see that the USD number increased and it dropped down. Now let's correlate with our foreign exchange reserve value and see what was going on. So you see the gold price, and this is also in weekly chart. See, weekly chart, and it is for in the end of February, right? So you see that it was going down, and suddenly up, and then suddenly down. So you can understand that this particular line item is closely related with the valuation of gold along with the incremental addition. It is not about that as this line item keeps on increasing, it is all about accumulation. The valuation is not increasing on account of just accumulation, means in Reserve Bank buying gold. It is because of the valuation also of gold. And that's why there is a slight drop here. So if you see that though the foreign currency assets have been reasonably held constant, see there is hardly a change here from this week to this week, but there is a drop in foreign currency because of this drop, because of the fall in gold prices. So now you understand that why this gold prices central bank is buying. What is the intent of that? Oh, sorry, the gold quantum the central bank is buying. What is the intent of that? The main intent is to prevent this row going highly volatile and to maintain a ratio of gold reserve with respect to our foreign currency asset reserve, right? Now let's look at what we are going to see in the future, which is very important to understand. Now, if you look at this chart tells us a very, very important story. So if I take a yearly time scale, you will understand what is going on. You will find that the gold prices have remained stable for a long period of time. And then in FY21 onwards, though it remained stable and sharply has shot from FY 2023 till FY 2025, which gives us an indication that the worldwide focus has been towards gold. Now, whenever there is a focus towards gold, because this is what? This is gold spot prices. This is not just about central bank. This is the spot prices of gold because of different type of trade which is happening not only about central bank but other consumers also. So this gives an indication that there has been an affinity towards gold, which tells us that the population, the world population is not very confident about the world economy. So that's why there is a trend. So you go to any country, you will find that in INR also, the same trend you will be able to see. The gold prices have been showing an increasing trend. So what does it tell about our economy or the world economy? It very clearly tells us that there is a lack of confidence. People do not have the confidence about the stability of the world economy. This is a very, very serious sign. And that is why I believe that the gold prices are going to be raised, and that's why the government of India, because of their gold sovereign bond that they had launched, now have been scratching their head to how to deal with that situation. Because the valuation of gold prices are going so high that instead of making money from the sovereign gold bond, which they had announced with a lot of fanfare, now they have a huge obligation to pay up those amounts to the consumers because they had not visualized that. So it actually translated into a negative thing for the government of India and escalating their obligation. So this was completely unforeseen. Now this is happening in all currencies, whether you take Turkish currency, Egyptian currencies, Russian currencies, any Japanese currencies, just you look at the trend. You see? So just to summarize this video, gold is a very, very important reference which tells a story, and it kind of gives an indication of the behavior of the world at large and the confidence towards other asset class other than gold, which means share prices, other thing, investing in equity, investing in different type of instruments, and to get reasonable return. When they don't get that kind of reasonable return, the confidence is shattered, they start investing in gold. And the rising price of gold is a very, very serious indicator that world economy has not yet stabilized. People do not have confidence. That is the final takeaway from this video. So you understand, just we have to follow the gold prices and we have to see how this trend is going towards future, whether we are going to see a dip in gold prices or not going forward. That may be an indicator that we are heading towards past, what used to happen in past, where gold as an asset class was quite stable. The prices were increasing at the rate of inflation. Now it is not about the rate of inflation, it is about the confidence of the world population towards the stability of world economy. Okay friends, I hope that you understand, these are charts which you will be able to get access to from my website. I maintain these charts. If you see that these are all coming from the horse's mouth, World Gold Council. The Excel sheets are pretty complicated, so therefore I had to write script in order to convert this into these charts, and these charts are going to be available in my website. You can just go and search here gold and different types of heading, and you will be able to get access to this chart. Thank you friends for your time. I'll come back with a new video next time on a new interesting topic. Thank you very much.